I'm Greg Hunter. Welcome to USAWatchdog.com. With us a guest we haven't had on in a while. He's been on a self-imposed hiatus. He just hasn't been on anywhere, and he called me up the other day and said, I haven't been really talking to anybody, and so I'd like to come back on and call him on your show. I've had a lot of requests by other people, but I want to talk on your show about what's going on with the economy. Of course, it's Greg Mannarino from TradersChoice.net. Greg Mannarino, a professional trader. He does this for a living. Greg Mannarino, thanks for joining us today on USAWatchdog.com.
Great to be here with you, Greg. You know, I love you. My fans love you. And I'm glad to be back.
Well, good. Let's start right off with the crazy time with the Larry Kudlow. I've been out asking for a 0.5 point rate cut. There's been stories on places like Zero Hedge saying, with predictions from other people saying, the Trump administration is wanting to, and I like Donald Trump, but they're telling us we're at record all-time highs in the S&P and the economy is fantastic, and they're pushing for a 0.5% rate cut and more QE. What's going on?
Greg, this is the same story that we've been seeing since the takeover of these markets back in 2008. This is nothing new here. The only thing supporting this entire environment is debt. It's the only product of world central banks. I don't care what anyone might think otherwise. That is what they do. And unfortunately, right now, as a matter of fact, I was, without any hesitation, go as far as to say that the environment we are in now is unlike anything we have ever seen before in world history. The distortions which exist in this market are hard to get your head around. Again, we've never been here. We do not have any resemblance whatsoever of a free market, nor a free market economy. We, unfortunately, in the United States are managed across the board. The information being fed through the mainstream outlets is all fake. This GDP number we got recently, completely fake. And that's easily provable, and we can talk about that if you want to. But it comes down to this. In order to sustain where we are, and this is no secret, Greg, you and I both have spoken about this for years. I don't think there's two louder voices besides you and I that have explained this to people, that the relentless acquisition of debt is all that's supporting what the environment we are in. There is no recovery. There is no economic boom. It's a debt boom. That's what we have. And it's not just here in the United States. It's a global phenomenon. And it will correct to fair value at one point. We do not know when. There are clues. There's no doubt about it. We can make a pretty good guess, I would say, by watching what's going on here in the bond market. But without a rate cut moving forward, we will not be able to sustain the current valuations in this market. I don't think people understand. I know you do, probably better than anybody else, that the equity markets around the world, not just here in America, derive value from what's going on in the bond market. You know, the bond market is the largest aspect of this market by exponents. So whatever is going on in the debt market will be reflected by the price action of the stock market. So they must continue to inflate that bubble. There's nothing like it. There's never been anything like it. That's why a rate cut is being called for. 2 calls so far for quantitative easing have been made by the administration. Now, again, what does this mean? More debt, more debt. Now, it should be pretty obvious to people that, and again, you and I have spoken about this, a lot of other guys too, that we need to continue to borrow in greater and greater amounts just to sustain where we are. We can't stop. That's why debts and deficits continue to explode. The trade gap continues to get wider. It's historic. Can't stop. So when we hear things come out of people's mouths about how we're going to make a cut here, or we're going to take debt from these people and pay off this debt, it's just nonsense. We have to fix, and it won't ever happen in our lifetime, the debt-based economic model, the core of the issue. But again, in order to fix that, we would need to steal power away from the world central banks that are essentially running the show right now. And they will not give up that power. We fought wars to establish the petrodollar, the debt-based economic model, the fiat monetary system. It's a terrible, terrible machine.
I mean, when you see Larry Kudlow on the air talking about we need a rate cut, a half a point, not a quarter point, not to ease it down a little to kind of back it off a little. I mean, a half a point rate cut in today. I mean, we haven't had a half a point rate increase, and we haven't had a half a point rate cut in, I don't know, what, 15, 20 years? I mean, when's the last time we had a half a point rate cut at one time?
Yeah, well, let me put a perspective on that.
I mean, they were cutting rates at a half a point clip after the 2008-2009, unless I'm missing something. They never cut rates. They just kept notching it down a quarter of a point, right? So what do they see that they all of a sudden, bing, we need a half point rate cut? I mean, what are they seeing that?
To me, it's not a matter of seeing. They understand the situation better than anybody else. The general population, Greg, are not as smart as the people that follow your work. There's no doubt about it. I think the people that follow your work have a pretty good understanding of the economy and how it's all propped up and it's completely fake. Everything about it's managed. I mean, we don't have a free market. We do not have a free market economy. What is being done now, and every mechanism possible, that things that we can't even think about, is being utilized to push more cash into the stock market, to hyperinflate it. Look, these valuations, I don't have to tell you, they make no sense. Nothing about this market makes any sense.
Record all-time highs again on the S&P. That's what you're talking about.
Record high with the S&P 500. But look, where else is cash going to go? Let's say, for example, if Larry Kudlow gets his wish, and I would be shocked if I don't believe we're going to get a 1/2 of a point cut at any one time. They're going to do it incrementally. We are going to get a cut. We have to get a cut to sustain the market. Without the easy money being poured into this market, the valuation, this market would be cut by 2/3. The value of the Dow Jones Industrial Average would fall by 2/3. The middle class will take a wipeout with regard to their 401k plans or an account that only makes money when the stock market goes higher. So right now, the illusion must be kept real. Stocks have to go higher in this environment. Again, it goes back to the cycle that we're in, election cycle. This is not new. If people were to look back upon election cycles in the past, a lot of effort goes into propping up the stock market, but we already are in an epic bubble. So what Larry Kudlow is just trying to do is get more cash to move into the stock market. Again, rate cuts, and it's not just Larry Kudlow calling for it, quantitative easing. All this means more debt acquisition, more interest rate suppression, middle class getting robbed blind with regard to the interest earning accounts that are yielding less than the actual rate of inflation, and it forces an environment of risk. It's so simple. It's like 2 + 2, cash moving into the stock market, hyperinflating that bubble. That's where we are now, and it's managed. Understand, we don't have nothing here. Unfortunately, is real anymore. Look, I'm going to say this here, and it's going to probably sound bad, but for guys like me that trade this market, it's a dream come true. This environment.
Why?
Because we know what's going to happen. With rates being suppressed here, all you need to do is continue to buy the dips. We understand the mechanism, and they're broadcasting it. Rate suppression will continue. Rate cuts are coming, possibly even quantitative easing. This will vault. You remember that word vault, Greg? I said that when Donald Trump got elected.
I was shocked. You said, I think the quote was, this is a game changer. Things are going to go up from here. And I went, and you were right. Everybody says, oh, you're just an echo chamber. You always say things are bad. Things are going to be bad. You were like, no, things are going to go up. We're going to hit new highs on the stock market. Wow, what did we hit this past week? New highs.
Exactly. It was very obvious to me at the time, and I think you and me together on your show, we were like the first guys to come out here and put that kind of information out. I don't know who else was putting that out, but I think that was a pretty good call. But I'll say this. I did not believe that we would be where we are today. I honestly had hoped that at least we would get some resemblance of a real market once again. And they can't do it. The takeover of the markets in 2008, that was a terrible, terrible thing. The markets have one job. You know this better than anybody else. That is to determine fair value, not just the stock market, housing, metals, which is the biggest rigged aspect of this market by any measure, and we could talk about that too.
We will.
But once the central banks, with their respective leaders around the world, decided to take over the markets, what are they going to do? They had no exit plan, never. All they were going to do at that point was hyperinflate the debt bubble, pull equities with it, because I think what we're witnessing now, if you notice, we're seeing elements in this particular bubble with regard to the stock market that we've seen in every other bubble. Look at this IPO market that we have right now. Does this ring a bell with anyone? Look at the .com bubble. We're seeing the same kind of things. And I'll tell you something else that's going on. It's very terrible. The underwriters of a lot of these companies that are being offered these IPOs, they're deliberately undervaluing and they're undervaluing the underlying company deliberately, and then they are hyping it. Why would they do that? Why would an underwriter who's bringing a company public do that? Because they get about half of the shares. People don't know that. So what they do, as soon as that happens, boom, you get like an incredible surge because of the hype and the undervalue of the particular company, and the underwriter reaps rewards like you cannot believe. It's completely rigged. No one wants to look at it, but this is how it's done. So anyway, we're seeing elements of every prior bubble in this one. This one is unlike anything that we've ever seen before, and that means the eventual correction to fair value is going to be unlike anything we've ever seen. We're going to get an overshoot to the downside. There's no doubt about it. But what the real valuation of this market is, no one can actually tell because of the distortions that exist in the debt market. They're unbelievable. And now we're talking about more rate cuts. We're talking about quantitative easing. Are you kidding me?
You don't think it's going to sell off anytime soon? I mean, obviously, listen, Donald Trump
can't do it. The market can't sell off because there's nowhere else to go with the rigging in the debt market. Where are investors going to put cash to work? I mean, realistically, it should be going into suppressed assets. It should be going into gold. It should be going into silver because of the existence of the derivative market. The price of gold and silver.
Are you still a buyer of gold and silver? I mean, you always just become your own central bank and you sweep money out and you keep adding. I mean, gold's at 12.85. Bo Pony said that gold's low was 10.45 in 2015, and since then it's up about 25%. Good call on him. But you know, silver's at 15. I mean, we're talking about mining costs now. We're talking close to mining costs. Silver for sure. Gold maybe a little above mining costs. And then it became a tier one asset. And, you know, central banks are, you know, poo-pooing it, and yet they're buying it like crazy. And countries like Australia want their gold back, and so did Venezuela. And let's see, who else wanted their gold back? Italy says it's that gold belongs to them and not the ECB. So we got a food fight over tonnage, over physical. So what do you think's going on with the gold and silver market? A lot of people want to, you know, a lot of people want to throw in the towel and capitulate, but this is so ugly. Like you said, we've never been here before. What do you think about gold and silver? Should people throw in the towel?
Oh, no. They should be acquiring this stuff like they have never done before. Let me outline very briefly how the rigging is done. It's very simple to understand. Let's look at a particular company. Let's look at Apple stock. Now, as you know, I am an equity derivatives trader. So I think I understand the derivative market, at least with regard to equities, probably better than most people on the planet. This is all I do. Okay. So when a derivative is an asset that derives value from an underlying asset, for example, Apple stock. So if you buy an option, a call or a put on Apple, that option derives value from the underlying asset. In this case, we're talking about Apple stock. With regard to gold and silver, it's completely upside down. The physical metal derives value from the derivative.
Ooh, oh, yeah, very well explained. Wow. Why? Why?
Because they can do what they want with it. They can dump paper on the market. It's not real. It doesn't exist. It's not on the elemental chart. This is how they rig it. And this is how they keep the price suppressed. But look, as with everything else, this is an inverse bubble, in my opinion, on an epic scale. Just like the debt market is in the biggest bubble the world has ever seen. And on the back of that, we have pulled stocks higher. We have pulled housing higher. And again, there's more calls to keep this going. It's a rigged
go into this gold and silver inverse bubble. That is I've never heard you say this term. Gold and silver are in an inverse bubble. Explain.
Again, because of the way the physical is valued from the derivative, and the derivative market, they can do whatever they want with it. Again, how many times have we seen tons dumped onto the market using a market order, Greg? Paper. No one would do this unless it's a deliberate act to suppress that price. We've seen it repeatedly over and over again. Gold, silver. It's, I laugh when I see it now because it's just so common. So understanding that the market is completely fake with regard to gold and silver, and the price of the physical asset is so disconnected from reality based on exploding debt, based on digits being added to a screen every single day. That's how you know that's where you need to be. Look, I don't sell gold. I don't sell silver. I don't profit from it. But I understand that this is where we need to be. If we understand that there is an inverse bubble, like we just talked about with regard to gold and silver, well, we need to be on the right side of the trade. Bet against the debt, become your own central bank. These are the two things I've been pushing since I sat down, Greg, after the last market meltdown. And explain to people this is what they need to do. Hard assets like gold, like silver. Now, a house is a hard asset, but it's massively overvalued. The real estate market is in a bubble, worse than 2008. And that's going to correct too. Interest rate suppression has forced cash into assets it shouldn't have gone into. Look, I think we started this entire conversation off with the distortions that exist today in this market. Eclipse every single distortion that has ever existed in the financial markets in history. There's nothing like it. It's very unique. Although, again, what do we know? We know markets run in cycles. This is what they do. And at one point here, it's going to correct. I don't think that's going to happen anytime soon, Greg. Where do people need to be looking? It's very simple. People are distracted. If you notice every single financial channel that's out there, they try to get you to stare at the stock market. More importantly, the Dow Jones Industrial Average, 30 companies. That's all they want you to look at. Oh, look at the Dow. Oh, look at the Dow. They don't want people to look at the debt market and what's going on in the debt market. How we have it most of the curve is inverted.
Yes, let's talk about that. Before we move on, I want to get back to the gold and silver. I want to finish up that conversation. I have a question for you, and it's simply this. And other people have said this too. Bill Holter, who's an expert in Sinclair, he said it used to be they would dump, like not long ago, a week or so ago, they dumped a couple of weeks in a row. $1 billion and a half notional on the market, boom, and it drove it down $20 or $30, and it popped right back up. It seems that they can't really drive it down much lower than what they have. Silver's at about 15, and they can't drive it any lower. Gold's at 280 something. was, but they just don't seem to be able. They dump all this gold in papers on the market, and they can't seem to drive it much lower. What do you think's going on with that? They got to be frustrated. That's not what they want. I mean, they dump $1.5 billion on the market, and they want it to go down. I mean,
no, the problem is what they're trying to do when they do this kind of stuff. I think they're trying to shake people out. But I think the people that are smart enough to understand what's going on, they should be smiling every single time. I know it's frustrating, but whenever you see these kinds of things occur and they're trying to force the price lower, if it goes lower, what will this guy do? I'll back up the truck and I'll buy more. There's no doubt about it. I've been buying this stuff, Greg, for years, and I will not stop buying it. I think that gold and silver are the trades, physical gold and physical silver more specifically, are the greatest trades on earth. They are the most undervalued, suppressed assets on earth. They are real wealth. They've represented real wealth for thousands of years. And no politician, no Federal Reserve Chairperson is going to tell me different. When you hear that, then you know what you're hearing is a lie. And I hate nothing more in this world than lies. Because we know where lies come from, Greg. Lies do not come from the divine, do they? No, they don't. So
you're saying that the physical will, like rock, paper, scissors, the physical will destroy the paper. In the end, the physical will win over the paper shorts.
Greg, it's a very simple scenario to understand. And I'm going to outline this again in the most basic terms that anyone could possibly think of. What do we know? Let's just always talk about what we know. What we know is, and I can't imagine one person can argue this, that the debt is in the biggest bubble the world has ever seen. It's unbelievable. And it's going, central banks...
Verifiable fact.
Yeah,
it's a verifiable.
They're going to continue to inflate. They have no choice. This is going to, and I've been using those exact words for, I don't know, a decade. Inflate, inflate, inflate. And they're going to continue to suppress metals via the derivative for as long as they possibly can. But there's going to be a moment where this debt bubble does burst. Who in their right mind would be buying debt here? Think about an entity, a regular person. Who would buy a unit of debt and hold on to it for, let's say, 7 years? We were talking about the one month versus the 7 year. The 1 month is yielding more than a 7 year right now, annualized, okay?
Yep.
Who in their right mind would want to be in a debt instrument like that? Again, it's central banks. They are the lenders of last resort. They're buying everything. And I'll tell you something else, Greg. You know this as well as I do. These central banks, they're buying each other's debt. They're keeping it off balance sheet. There's no doubt about it. I can't prove it, but deductive reasoning makes it pretty obvious. So with that said, there's going to be a moment where we do get a massive sell-off in the debt market when that bubble bursts. When there is a rally in the debt market, when there is debt being bought, rates, yields drop. People don't understand that. It's kind of a weird kind of a concept. So what's going to end up happening, Greg, and there is no doubt at all that this will happen, is a snapback is going to occur in the debt market, and rates are going to spike very rapidly. Now, don't just listen to Greg Mannarino here. Listen to all the big fund managers, the multi-billionaire fund managers. Even Alan Greenspan explained this recently, how this has the potential to happen, potential which will happen. When the debt market sells off, what is that going to do? Rates are going to spike rapidly. So there's the key. Stop looking at the stock market for the big one. The market is going to waver. It's going to have drops from time to time. But by watching the bond market, you can tell when the big one is going to occur. The big one is going to occur when we get an uncontrolled sell-off in the debt market. Once we get an uncontrolled sell-off in the debt market, you're going to see rates spike, and they're going to spike rapidly. Why rapidly? Because no one wants to be the last person out the door. Okay? Once that occurs and rates spike in the same way that rate suppression has inflated the stock market bubble and a housing bubble, these are going to burst rapidly as well. Very rapid sell-off in the debt market, very rapid sell-off in the stock market. Cash does not go to money heaven. It's going to go into suppressed assets. So no amount of rigging is going to be able to stop the explosive move that gold and silver will make at one particular time. And I think I just laid that out in the most simple way anyone could possibly understand. If you don't get it, watch that segment again, because that's how it's going to play out.
I just want to have one thing, because you consider a lot of stuff when you're trading, and that is the war scenario. I mean, you have the Yemen thing hot and heavy for the last 4 years. You have the Trump administration stopping the waivers for countries like India and China buying Iran's oil. They said they would, shut down the Gate of Tears, the Bab el Mandeb Strait, the Strait of Hormuz, the other strait. They would do, they're pissed. The Iranians are not happy. I'm for America, not for Iran. But, you have all these bases in Syria. You have all these flashpoints. What about the war card?
Okay.
Could that kill the debt market too in a hurry? Could that be could be a triggering event?
Well, let's talk a little bit about crude oil here, Greg. If everyone, unless you live under a rock, you see what's going on here with crude oil. And every mechanism that you can possibly imagine is going to be used to keep it propped up. And this is part of that too, because the two largest sectors of the market are the financials and the energy sector. The price of oil must be kept high. And by that mechanism, the energy sector will get propped up. And who finances the energy sector? Well, it's the banks, of course. So with those two sectors alone being propped up through this mechanism, okay, it's a mechanism that has nothing to do with doing good for mankind. It's a mechanism to keep the markets propped up, to keep cash moving into the energy sector, to keep cash moving into the financial sector, protecting the petrodollar, making sure the Saudis can profit from this. That's what it really comes down to.
Even if we don't have all-out war, if we don't, it's the idea of
course, all-out war is always the end game here. This is why we will never see a gold-backed currency in our lifetime. The central bank's power resides in their ability to issue debt. How do we finance wars, Greg? If we restraining it by holding, let's say, having a commodity-backed currency, we would restrain spending. We would kill the debt-based economic model. But we have fought wars to establish it. The entire Vietnam War was fought not to fight the spread of communism. It was to establish the petrodollar and the fiat monetary system, period. There is no way by signing some piece of paper, HR 5404, whatever it might be, that they're going to give up that power. Millions of people will die before they allow that to happen.
Now, I'm gonna come back real quick here to your debt. In our lifetimes, you won't see it. I don't know, Greg. I think we will see it. I mean, we're in the longest expansion in history now.
Why are we in the long expansion in history, Greg? We've inflated the debt. That's what they've done. It's not real.
You don't think that in our lifetimes that I won't be like 90 when this debt bubble blows. I mean, some people are looking at this going,
no.
Okay, so they won't give up their debt model, but this thing, you don't think that this thing could blow? Somebody could zig. Some ship could be sank in the
the debt market's the bubble, Greg. That's the whole issue. And it's being done.
But it won't happen for our lifetimes. You said it wouldn't happen in our lifetimes and the debt bubble would blow up. You didn't mean that.
No. I did not say that.
Okay.
I said we will not get a commodity-backed currency in our lifetime.
But you think the debt bubble could blow up when? At any time? I mean, it's the longest expansion ever, to your point. I'm not arguing with you, though. I just want to make sure I get this out of you.
No, the debt bubble is going to blow, Greg. When, again, let's look at the scenario. It's pretty simple. Who in their right mind would hold a debt instrument now that is yielding less than the actual rate of inflation? There's going to be a moment when holders of that, other than central banks who are buying everything, they're the lenders of last resort. When this stuff starts to get dumped and central banks have to print more cash to keep the debt bubble suspended, it's a lose-lose situation. The more cash they print out of thin air, the more purchasing power gets stolen from the currency, from the middle class, who always loses here. Now, again, to even put a bigger perspective on this here, the grand scheme is to create a two-tier society. Step one is already done. We have a managed market and a managed market economy here in the United States. It's already done. The next phase of this is pretty simple here. The complete wipeout of the middle class. And that's why they're hyperinflating this debt bubble. The debt bubble, pulling up stocks with it, middle class, most of the middle class at least have investments in a 401k plan. When the bubble bursts, the middle class are going to be the last people out. They always are. It's the institutional investors, the banks, who are out first. Wealth transfer, Greg, that's all this comes down to. Middle class loses.
You're saying buy gold and silver, and you're saying
it's not if you're holding gold and silver, but you and me, and probably a fraction of the people that are watching your video, are actually holders of this hard asset. Most people don't. Maybe 1% of the population have it. Will have it. Very small, very small percent of the population hold the hard asset, and that's very, very sad. But understand what's going to end up happening here. We are in the death throes, in my opinion, of the debt-based economic model. They know that. That's why they're hyperinflating the debt bubble. That's why they're hyperinflating the stock market bubble. That's why they're hyperinflating assets that, like housing, for example, and why these distortions exist. But they will normalize. And when they do, the middle class is going to lose in the biggest way that they possibly can. And the more that we inflate this stock market, the more calls for rate cuts, the more calls for quantitative easing, the harder it's going to be on the middle class when this corrects to fair value. What's going to end up be the end game is a new system is going to be put in place, issued by the same ones that brought it down, and it will not be put in place to benefit anyone. The power of the establishment here exists in their ability to issue debt. They will never give that up. The 1%ers will always benefit, while the middle class always loses. This is not a new thing. This goes back for as long as the middle class has existed. Middle class is more or less a new thing, Greg. We've had a feudal system for most of history, and we're going back to it.
You think they'll put this off? So do you think the debt bubble is imminent to pop, or do you think they're trying to put it off till after the 2020, after the 2020 presidential?
Oh, well, no. First of all, we're going to be fist-fed more fake data. Okay, let's talk about that real quick. This 3.2 GDP number, which came out of left field, is nothing short of miraculous. It's a lie. It's and I'm going to outline that for you right here. How we know that it's a lie. What do we know? What do we know? Let's talk about what we know from the government's own data, easily researchable. Industrial production here in the United States has been falling steadily. Today, we got the Chicago PMI, which is a measure of the strength of the manufacturing sector here in the United States, 2-year low. We are not doing well here in the United States, but the illusion must be kept real. We are doing great. All you need to look at is the money velocity at historic lows. You cannot have a boom or a recovery without money velocity moving higher. Okay, going back to the 3.2 GDP. So we have industrial production falling off of a cliff. We're importing less. We're exporting less. The trade gap is getting wider, but we're stockpiling goods, which added to this 3.2 GDP. We're stockpiling it? Where is it coming from? So it's a lie. Again, I hate lies more than anything else. It drives me crazy. People who follow my work know that. I blow my stock off when I hear this stuff, but it's fake. It's part of the managed market, part of the managed market economy, and that's where they're calling for rate cuts. That's where they're calling for quantitative easing. It's the only thing keeping this up. Who knows, really, Greg? And I'll tell you this, and you know this better than anybody else. They've managed to push this further than most people on the planet believed it would go. No one understood.
To your point, 2008, 2009. To your point,
no one understood the lengths that they would go through.
You have said this many times, about 7 or 8 years ago. You said, listen, 2008, 2009 was the party over moment. This is all life support.
We are on life support, and it's debt support. That's the only thing. Without that acquisition of more and more debt, we are done. We will be back into the Stone Age. And I'll tell you the most frightening part of this, Greg. And I urge people to look this up themselves. We've watched the debt bubble inflate They inflate. It's like a hockey stick around the world. At the same time, we watch global population. They follow in tandem, Greg. In tandem. What's going to happen when the debt bubble bursts? I'm going to show you. World population. Boom. That's it, Greg. Biblical.
Greg Mannarino, thanks for coming on USAWatchdog.com. Thanks for coming out of your hiatus to come back here.
Only for you, Greg.
Well, it's just really nice. So thanks for coming on. I know you wrote me a while ago and you just stopped doing all interviews. For whatever reason, you just didn't want to do it. I mean, you trade professionally and you have traderschoice.net and you have your YouTube and your videos and everything else. So you had enough on your plate. But anyway, I'm glad you came back to talk to us. Gregory Mannarino, of course, traderschoice.net. It's all free. Lots of free stuff on there. And all you put out videos.
Everything is free.
Do you do a
I
couple
give everything
videos
away
a day?
now. I don't charge a dime for anything. Please go to my website. Everything is free. Download everything. It's free. All my publications are free. All I ask people to do is pay it forward. Pay it forward. Love each other, care about each other, and be charitable. Most important things, Greg. All of this doesn't matter without each other. We are all responsible for each other, period.
Very good, Greg. Gregory Mannarino, traderschoice.net. Thank you for joining us today on USAWatchdog.com. I enjoyed this. Thanks.
Me too, Greg. Thanks.
And we got it.
Greg, I think we knocked it out of the freaking ballpark. People are going to have a